Well, that was a big bounce in the stock market, but everyone's wondering if it's going to be reversed. We're going to talk about certain levels today in the market. Brief. My name is Michael. So if you're new here, welcome to the channel. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. A lot of crazy things took place. Today's video is going to be a little bit shorter than usual because we have CPI data coming out tomorrow, and that could throw things everywhere. I'll give you some thoughts on that. All right, everybody, welcome back. So, yep, we got that bounce. It was a big one. It was a big one in the overnight session. Tech led the way, financials and consumer discretionary, right? So when these are all up in the top, top performing top three sectors, you can expect that the indices are going to be doing quite well. Now, when these three are at the bottom, the opposite is true, which we had just the other day, right? Where tech, financials, and consumer discretionary were at the bottom. Now, interesting overall play. Is this going to continue? Is it not going to continue? Right? We had that back off in energy. We had the safety names towards the bottom of the list once again here. Look at, obviously we have the CPI data coming out tomorrow. Financials is a big weight here. And as you know, the yields rose today, and that benefits financials for the most part, right? And I wanted to point out just a couple levels on financials to keep a close eye on. So first and foremost, it's not the greatest looking candle overall, but obviously it was a big day, right? A big gap up, higher high, higher low, but just notice where it's at within this structure here. If you just pay close attention, we've had support here, support there, right? And now if you just draw a line across, we're just basically tapping into that previous support, which now could be resistance. So the S&P 500 could still very well struggle, which you'll see here, if this starts obviously backing off a little bit. And we will see what happens. It's still overall in this bearish trend, but it came to the lower range here, support. This is more the middle of the range. If we come back up, that is obviously going to probably help the S&P 500, especially if it comes back up. But if we have yields back off a little bit or slow down from that rate of change at which they are moving. And one thing I can assure you is that when we have the CPI data come out tomorrow, we're going to see some more crazy movements in the yields. Here's the 10-year yield looking at the TNX. It was up 4.06% today, closing at 1.9, basically just coming right back up to that 2.0. But it has been a very wild trading session. If you just look at these trading days, just look at these rapid, huge moves going back and forth. So are we going to start backing off and is bonds going to start lifting up? That is to be determined at this particular point in time. Like I've already stated, we have PPI, CPI, mainly CPI is going to be the main one to watch coming out tomorrow morning. So we'll be keeping an eye on it. If we dig into that a little bit, this is where it gets a little interesting, right? Everyone's calling like inflation's going to go, higher and higher, and rightfully so, but the rate at which it's going to be moving up may very well be slowing. You got to look here. So we go from 6.2 to 6.8 to 7 to 7.5, and now the consensus is 7.9. And if we come in above that, I would imagine that's going to put some pressure on the markets. But if we come in at consensus, I don't think that there's going to be any surprise there or come a little bit lower. Now, if we come at consensus, right, that's going from 7 to 7.5 to 7.9. It would show us that the rate at which it's rising is slowing down subtly. So that is going to be something to continue to pay attention to. If we take a look at miners have been on this monster run up, and they didn't actually go anywhere today, ended up flat on the day. Meanwhile, gold did take a massive, that is not gold right here, took a massive fall. You can see that big bearish candle down 2.7% on the trading day there. Now, that's interesting to me because, miners have been overextended. So that's going to be one to watch. I'm looking for pullbacks in miners, but just note that, it's been a crazy run up. If we look at the BP chart, it's getting overextended to the upside. So watching for those pullbacks will be beneficial. If we do take a look at oil has been, on this monster run, and we talked about this on yesterday's episode. We talked about how everything was, there was this big run up and there was this kind of blow off valve on the volume, which to me led me to believe that we could be coming into a period of consolidation or a pullback. And, one single day we dropped 12.13%. That doesn't mean we're crashing right here, but we can look for, areas to potentially pull back in. And energy, obviously, XLE was the worst performing sector on the day. So that is one to watch because it's still very strong. So a pullback was bound to happen. Now, one thing that we got to pay attention to here is volatility. Volatility still remains rather big. It was, it was down slightly on the day. Meanwhile, we saw a pretty big move in the indices. So it's still trending higher. That's a trend line you want to watch. If it continues to, slam down, that's going to be good for the indices. But right now, it's still putting higher highs, higher lows, meaning that the trend in the S&P 500 remains to be bearish, even though that we're getting these counter trend bounces as it stands right now. If you take a look at the 15-minute time frame, you can see it here. We bid back up towards the end of the trading session on the VIX, kind of coming outside of this. But now we have one gap above us. Look for that to potentially get filled, and we have all these gaps beneath us. One more extra gap there at 45. So if we do get some sort of spike in volatility, that could be a level to pay attention to. Now, we talked about this chart in the prior past, where when it gets the rate of change between the tips and treasury bonds get above the rate of change about 1.3, 1.4, right around that range, we could be soon to see volatility. And well, we got it twice right here, and it started continuing to rise to a level we haven't seen in quite some time. And volatility continued to just trend higher and higher. So that was a good indication that we might very well continue to see volatility continue to move higher. And you can see here. It let us know ahead of time before volatility spiked. Now, the reason why I'm showing you this now is we did hit a very high level. So I wanted to go back and just see, okay, what happens when we hit those really high levels and it starts to back off? Well, actually, the last time that happened was towards the pandemic low. So, as the market right here is selling off and we're hitting these high rate of changes, I'm not calling for the market to be a bottom here. But, if you put into, certain things into perspective, we have seasonality on our side. We have quarter end could potentially, have markups match with seasonality, right? And then we have some other indicators such as the put to call ratio that I've been talking about on previous videos. Looks like it's coming into a buy signal too as well. And we're starting to see that strength today. I don't have the updated put to call ratio, so I'm not showing it today, but if you follow me on Twitter, I'll post it there. But yeah, as you can see here, we came up to this level and, it didn't mark the perfect bottom. We started bouncing before then and then started backing off, actually came off and then started moving higher. So, it's something to just keep in your back pocket, right? It's just data. It's not like I'm trying to, determine whether this is bullish or bearish right here. I'm just giving you data. It's on the chart. It is what it is. Top into the indices now. Going to map out some good levels here. So SPY, we saw that nice bounce, nice big gap up, not much intraday action overall, right? A little bit of swings, but not as large of a range candle as the previous day. This level right here, 432.50, I think that can hold as a strong level of resistance. So be mindful that if we start getting above that, that can be a positive sign, but just know that we've had a prior area of resistance and support there previously, and then we have that gap fill. So yeah, price is coming off a big relief bounce right here. Could be short covering, could be a bunch of different things taking place, could be the start of a big huge rally. I don't know yet, but what I do know is that level can very well hold as a strong area of resistance. So keep in mind, right, just be mindful of the trend, right? If you don't follow me or if you're not on my Discord, I talked about that earlier as the price was coming into the 5-day moving average on the 15-minute time frame. So right here is coming into the 5-day moving average. I said, hey, could be a good time to take some profits if you were, profitable here, just because the fact is you got to respect the trend. And the trend right now still remains to be down. Understand there's still a lot of volatility packed in this session. The last time I checked, there is still pricing in from tomorrow's trading session and the next day's trading session a $9 move in the SPY. So there is a lot of volatility that can go up, that can go down, that is still being priced in as it stands right now. So be aware of that. A lot of people might look at this and be like, hey, yeah, no, declining 5-day moving average. If it gets denied, this could be very well a bear flag, and we're coming right back down there to fill that lower gap. Don't put it past anybody, right? But this also could be a V bottom, which we could see something very similar like that take place. So, as far as a trade goes right now, I'm a little bit hesitant on any specific trade. I was pretty confident on yesterday, but right now as it stands, we're back to where we start, where we stated, right? Just right back into this whole channel of, chop, this volatility channel there. And if we take a look at the Qs right here, very same situation, right? Just above 440, 441, that area right in here will be an area to be mindful of. We got that big bounce, right? Could be some sort of a capitulation type candle and we start to head higher. And, if you remember on the beginning of the market brief, or it was like, the weekly recap or whatever it was, I was saying, Kate, it was not yesterday's, but the day prior. I was saying there's more upside potential than there was risk to the downside. And what I pointed out was, yeah, if it comes out down into this lower range and it comes down a little bit, I wouldn't be surprised with this amount of volatility to see it to come right back up into the middle of the channel. And if you remember, I was basically pointing out that this would be your risk and this could be your reward. And as it stands right now, if you did take a trade like that, well, you're hitting your top reward right there. So it is smart to take profits while they are given to you so you can still respect this trend. If it starts to break up higher, it will pull back at some point and it will set back up again if the move wants to continue to move forward and go higher, if that's the case. But you got to just at least respect what the current trend is. Okay, if we take a look at the 15-minute time frame, got that gap beneath us, you could very well call this a bear flag. It was just basically wedging the entire day, had a little bit of a sell-off there towards the end of the day. Bearish crossover potentially taking place on the PMO there too as well to be mindful of. Declining 5-day moving average, and we're right back there in the middle of the channel. A lot of volatility still packed in the next 2 days, so be very mindful of that. Take a look at the IWM, did pretty well today as well. Gap up, getting held up right there at that 20-period moving average. If we can start getting above it, look at that declining 50-period moving average. So this double bottom still intact, and we're just right there in the middle of the channel, slightly above it, relatively unchanged on the week. If you take a look at the 15-minute time frame, you can just see here, look at all this volatility and open interest just building right here. Just a complete wind up for a potential pretty large move out of this at some point. When that is, I couldn't tell you, and I couldn't tell you the direction, but all I know is when we get setups, we can take them. And as it stands right now, I just don't see a great setup at this particular point in time. I need more data, and I don't like taking crazy trades going into a big report. I think that goes without saying for the most part. Actually, I shouldn't say that. It doesn't go without saying. All right, so let's just wrap this up now and conclude it. Wilshire, 5,000. Look at nice big move, but I want you to overall pay attention, right? We talked about this in the conclusion of yesterday's video. We talked about the positive divergence, the positive divergence, the positive divergence. Okay, as price action was heading lower. So it made sense to see some sort of a bounce, respect the trend, lower highs. Still remains lower highs, and this level right here, 44,500, still remains a level of resistance, support, okay? So it is still being respected, and we're far off of that. So even if we get a continued rally in some of these sectors, in some of these indices, understand that it still has work to do and it has a lot of time to reclaim certain key levels, okay? So be careful out there. More coming out on most likely tomorrow's episode after the CPI data, and then I'll have a weekly recap on Friday. Everybody have a wonderful night, and I will see you back